Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Thursday, October 8, 2009. The Australian economy added 40.6 thousand jobs in September, figures that beat expectations of another month of declining jobs, while the unemployment rate inched down to 5.7%. That was the first decline in the unemployment rate in 5 months. Looking deeper into the figures, it showed that most of the job gains were from an increase in permanent work compared to part-time jobs. The data may signal that job losses in the economy have peaked and signals that the central bank may follow up its interest rate increase this week with another one next month. The Aussie-US dollar pair, after rallying to 0.8950 in yesterday's trading, shot above that level following the positive Australian employment news. The Aussie rose as high as 0.9088 following a break and retest of the 0.90 psychological level. With the RBA being the first bank out of the G20 countries to raise rates, the Aussie may see more strength in the weeks to come. The Aussie yen pair broke above the 80 level, the first time it has been able to do so since early August. Today's action also cracked the downward sloping line of resistance established in the past several weeks. The Aussie news helped to spur gains in regional stocks, and that risk appetite carried over to European and US equities. Therefore, carry trade pairs like the Aussie yen were higher. There are a couple of even more important fundamental reports today in the form of the conclusion of interest rate meetings from the ECB and the Bank of England. The ECB kept rates at their record low of 1% following the conclusion of their meeting. ECB President Trichet said that rates were at an appropriate level and that inflation remains low. That gives the central bank leeway to keep rates at their current level till at least mid-next year. ECB policymakers are concerned that raising rates earlier can jeopardize a recovery as lending conditions would tighten. Fiscal stimulus is also beginning to wane and unemployment continues to be high, which will put headwinds in front of the recovery. There are also medium-term factors that can hamper growth, such as the balance sheets at financial and non-financial institutions. German industrial production, meanwhile, rose 1.7% in August, making up for the 1.1% decline in July. The increase was attributed to increased demand as a result of domestic stimulus measures and an improvement in global trade. The euro-dollar pair rose in today's trading as risk appetite boosted the euro. From Trichet, traders may have bought the euro on comments that unemployment may deteriorate less than forecast as the economy recovers. The pair bounced up off a power line that acted as resistance and is now support at 1.4650. From there, we set a new high for the week above 1.48. The pair's next resistance level will be a test of 1.4840, which was the high set on September 23rd and was a one-year high for the pair. The Bank of England held rates at 0.50%, as was widely expected, and said that it would spend the remainder of its £175 billion asset purchase program by November. The bank has so far bought more than £160 billion of government and company bonds. Though some sectors of the economy, like housing, are showing promise and consumer confidence is on the rise, there are still some spots of persistent weakness in the economy. Manufacturing is struggling to grow, with output falling by its largest amount since 1992 in August. The unemployment rate has risen to a 14-year high, and inflation remains under pressure. That gives the bank incentive to keep rates low for longer and to take other steps like perhaps expanding its asset purchase plan in its next meeting. The pound-dollar pair broke out of a recent triangle pattern, climbing as high as 1.6118 in today's trading after it moved above the downward-sloping resistance trend line. The rally stalled at the high from last week and turned down in late New York trading. Greenback weakness was very rampant in today's trading, so we shall see what happens at this resistance level to end the week tomorrow. The euro-pound pair extended its decline from yesterday, hitting a low of 0.9160 in the wake of the two interest rate decisions and following better U.S. data. However, the euro found some support from around the 61.8% retracement level of the recent upswing, and the euro rebounded to cut most of its losses. In a positive sign for the U.S. labor market, the number of workers filing first-time claims for unemployment benefits decreased more than economists expected last week. There were 521,000 of such claims, a 33,000 drop from the previous week, and the lowest claims have been since January 3rd. The number of total continuing claims decreased to 6.04 million, bringing this figure down from its level around 6.8 million a couple of months ago. A second report showed U.S. inventories at wholesalers fell 1.3% in August, the 12th straight monthly drop as sales rose 1%. That put the inventory to sales ratio at 1.20. That means it would take 1.2 months for wholesalers to deplete the amount of goods on hand, the lowest level since September 2008. That can set up the backdrop for wholesalers to order more goods, helping to boost manufacturing activity. We already saw the dollar against most of its key rivals, so we'll take a look at a final pair in the US dollar Canadian dollar. The pair has slowed down its fall to start the week, but it did break below yesterday's support at 1.0525. It will be seen if the selling momentum in the pair is perhaps waning, as the pair trades now at a one-year low. Tonight, look for Japan to release a measure of machinery orders, while overnight Germany posts its final version for September's consumer prices and figures on its trade. The UK will also release data on its trade balance and figures on producer prices. Tomorrow, both the US and Canada will reveal their trade statistics, while Canada also posts its employment report for September. And that wraps up today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.